Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your weekend financial update, and this is for Friday the 23rd of June 2017, and we're now just around 3:20 in the afternoon, which means settlement price in the stock indices, you're looking at them. Those markets will reopen at 3:30 and trade till 4 o'clock, but we're there. Now remember, on the weekend version of what I do, I look at the longer term charts, not the day-to-day charts, and I think that gives you an idea of what things look like for the little longer perspective. All right, let's take a look if we could. On the E-mini S&P, as you can see, and this is a monthly chart, by the way, not the weekly, we have gone from this current break of 1802.50, and each bar represents a month, up to 2451.50. Don't you want to kick yourself and just say, why don't I just hold on and buy it and ride it? The hardest thing to do, but boy, you do want to kick yourself. When we go to an area chart of closing prices, now what I don't have right is this close. It's 2434.50, all right? When I had done this just minutes ago, it was 37.50. I think I did it an hour and a half or so ago, and I just didn't bother to change that. So it's 2434.50. So the market has gone on this current move from 2327.50 to 2434.50. That's 117 points that the market has been climbing. So still a pretty good action market. When we go to a weekly bar chart, that's all that this is. You can see how nice the market has been moving up in an orderly fashion. The market now has a problem, and let me explain the problem. We have a pattern of higher lows and higher highs. For the week, we're going to be slightly down. If you take out 2418.25, you could break the bullish pattern. That's the problem. To keep this going, you've got to just not get through that number to keep that ratio there. If the market decides to retrace to the 18-week moving average of closes, and I'm not saying it's doing that, but it would be certainly a target if you took out 2418, well, that would give you a pattern. If you look at the current high, 2445.75 versus 2445.75, just a double top there. But a double top breaking through that low would take you out of the uptrend. So I think as a bull, I don't want to see that number violated on the longer term chart. When I take a look at Bollinger Bands, what's stopping the rally is you keep getting up to this upper Bollinger Band area, and that seems to be enough to hold it back. For the week and for the whole week, you've got up to 2451.50, and that was the upper Bollinger Band, and you've now sold off about 17 points from there. So it did its job. What's the job of a Bollinger Band? To keep the market trading within the bands 95% of the time. So one of the ways that I teach to look at it is theoretical resistance. That's the point. Theoretical support. That's the point. You get up to that band, look for the resistance area, adjust your thinking accordingly. Maybe that's where you take money off the table if you're long. In terms of market momentum, and I believe momentum leads price, you're just locked into a bullish momentum picture. This is no sign yet of abating, and that to me is the all-important thing. If it were to break down like this, see how that slope happened? Well, then I'd look for more of that, but that's not doing it at this point. So if there's surprises right now, I would assume they're going to be to the upside, not to the downside. In the NASDAQ, we've experienced a couple of week correction, and suddenly the market's getting its feet back under it. Important, too, is the fact that it now has a pattern of higher lows and higher highs. It is bullish. Momentum is trying to turn back up. I don't look at momentum on slow stochastics on the weekly charts the way that I do on dailies. I don't look at really the overbought, oversold. I look at where's the momentum, and it's trying to point up again. When I go to the Dow, you sort of went flat on your momentum. You can see that right here. The pattern is one where you came up, made a higher high, then a lower low, and now you're back up and riding that upper Bollinger Band. Yes, at any point these stock indices can take a breather, if you will, and pull back. But none of them have longer-term bear pictures. All have the potential for even higher prices on the charts. When you come to the Russell, the lonely Russell, you've got higher lows, higher highs, staying in a well-defined set of bands, the Bollinger Bands, and momentum still picking up right here. Yes, the resistance points are working of these upper Bollinger Bands. When you're hitting them, the market is backing away, and that's important to see. And in the VIX, you want to get chopped apart. This is the place. It is now in a very defined upper and lower Bollinger Band, certainly not giving you an idea of a trend, but momentum, if you believe it, is turned down. And if that's turned down and if prices decide to turn up, well, what happens? Not turn up, but stay down. That's what I meant to say. That's turned down. If prices decide to stay down, you go to the lower Bollinger Band around 966 looking for support, and that kicks up stocks. In the 10-year note, the market is at an area here where it's run out of upside momentum. That's the way I want to describe it. It seems to be stalling right now. It's still in an uptrend, higher lows, higher highs, certainly backed off from the upper Bollinger Band, but momentum has not turned down. It's sort of stalled and just gone flat. You no longer see the separation between the red and the blue line. The two numbers are getting very much closer and closer together. If I come back here, you can see how far apart they were, 8, 9 points, right? 10 points almost. Then they started narrowing in, and look where they're now taking you. You see what I'm getting at? Now you're about 1.5 points away, not even that. So narrowing in is what I'm saying, and as that narrowing in, it's going flat right now. So I always look at that to see what it's doing. On the dollar index, the trend remains down. You have on the weekly chart lower highs, lower lows. The market got under the 100-day average. It has rallied up to it and doesn't seem to be able to get through it. Momentum still sideways to flat, which means the trend remains down. In the euro currency, it's the flip-flop. You have the pattern of higher lows, higher highs, the market going sideways with momentum staying locked in bullish. If the market decides to go up, no reason you can't challenge that upper Bollinger Band, the 114 area. The British pound worked its way down back to the 18-week moving average of closes. Momentum is still pointing to the downside. You don't have an uptrend because you have lower highs, lower lows, but you're not in a downtrend because prices are closing over the 18-week average of closes. So you have a market that's got downside momentum, but price hasn't collapsed with any of that yet. In the crude oil, let's give a little credit to this. This crude, not crude oil, in the Canadian dollar, let's give the credit. It has been able to shake off the negative impact of low oil prices. I mean, look at this market, how it's come up. Any way you want to cut it, that's good action. And that's because the Canadian economy is firing on most of its cylinders. So even though oil's down, they're seeing housing, they're seeing materials, and go on, that is doing well. So longer-term picture, pullbacks here are still a buy at 74.53 until the price gets under 73.83. When I say buy, that's the support zone that I expect to see the pros at. Secondary support zones, the 100-day average. I never teach to buy the 100-day average. I think the pros will buy, as I said, down at that 18. But if you break the pattern of higher highs and higher lows with an overbought condition, watch out. Overbought would then be this rolling over. Right now, momentum is pointing higher. All prices did is stall at the 100-day average. Next zone could be 76.31 as the market is looking friendly, not friendly. And in the end, you've pulled back in for a respite. The market got up, pulled back, got to its 18-week average of closes, has managed to keep the pattern of higher highs and higher lows, but momentum is totally flat. I think this market's not doing much of anything. In the crude oil market, you finished out now at 43.09. Now, keep in the back of your mind, that's under the lower Bollinger Band. You are still very much in the pattern of lower highs, lower lows in a bear trend with downside momentum. Not very impressive. For the week, down $1.65 and not getting much of a bounce. Nat gas has a pattern of a higher high and a lower low. Momentum is down. Price has a downside bias since it's under the 18-week moving average of closes. Should it elect to drop from here, look for 272. Should it want to rally, consider 310, 309.60, the resistance zone on the market on rallies, and that's probably where I'd leave those. I want to remind you of what we do. I teach. And one of the things I've always thought I'd done the best is teach people a simple trading method. Now I'm adding to this because I'm now doing pivot points, MACD, and very, very shortly I'm going to start releasing snippets on how to use those here on these stations. But it doesn't replace learning the basics of swing lines, moving averages, slow stochastics, Bollinger Bands, and another all-important tool, window envelopes, a profit-taking tool. So what I did is I sat down and I recorded in a very certain type of order a school for you. 6 hours worth of videos they're now telling me. I've been saying 4, they said it's longer at 6. Broken down into 54 videos. See what I do, you do the same. And let me tell you the scenario. Start you off with PowerPoint so that you get an idea of what I'm talking about. Then I'm going to take you to real charts, and I'm going to cover up the names of the charts. I'm going to take off sometimes the scales. And we're going to look at real patterns, real markets, sometimes current. And what I want you to do is get out of your mind, this is gold. Gold, you're always bullish. This is oil, I'm always bearish now in the oil. You get what I'm saying? Because no matter what you think you're doing, you have an opinion. And without the opinion, you start learning to follow the techniques. And that's the hardest thing. Believe me, the chart is no more than you do. It's such a rough thing to tell people, but it's true. The chart action knows more than you do. You'll say what this market's got to do. Look at this is the reaction. You think I haven't been there and it goes the other way? You're dealing with the guy that I'm like Swiss cheese. You should be able to see through me for all the times I've been wrong. But then I get right too. And the key is discipline and how to do this. So it's a course I put together. In the course, you get charting software. Now, there's 2 versions of the software. We have a Java-based. If you have a Mac computer and you don't want to use Parallel and other versions, you'll be able to use that. Most people have PCs. We have the Java-based as well, and it's got everything. $99 values thrown in with the course. Then you need to get my 30 days market research, because in the morning I put out a video that I want you to follow every morning. I'm going to reinforce every day what you're learning and talk to you just like you were next to me, teaching you those techniques. By the way, you can always call me and ask me questions. I do take them and I do talk to my students. That value was $60. It's a $160 rough value. The course is $99.95, but through June, if you type in IRA 20, IRA 20, you get $20 off the course. There's no shipping and handling because it's an online course. It operates when you decide to operate the video. So from the first time you put in the video, that's when the counter goes on. Prior to that, you may say, I want to buy the course, take advantage of it now, but I won't be ready to do it until after July 4th, but I want that discount. It'll work that way. Just let us know, and we'll make sure that that's how it works for you. Call us. Go to our website. If you go to the website, you'll see under the word education, follow it. The fact sheet is there. Everything's explained, even with videos to help you out. Or click right up here if you're watching me on YouTube, and when you click there, you'll go to that education page. You can work with it from there. Here's a guarantee trade for you. I'm going to raise the price very shortly. Don't lose out. I'm Ira Epstein. You have a good day, and I'll talk to you all next week.